Well, hello, everybody. Happy Friday. This is Brian D'Amico. I am happy to be here on a Friday with you at, 2 o'clock in the afternoon here on the East Coast. So I like to hop in a few minutes early. We are about 4 minutes away from the official kickoff of the webinar. So let's just make sure that the technology is working. So, first off, welcome and thank you for being here early to the session. If you can hear my voice, find that chat box and type in yes. Also, if you could see my screen, there's a person, I guess, laying on a hammock with a computer on his, as my, I guess, kids would say, tummy. Well, they don't say tummy anymore. They're older than that now. They're in high school, so I guess as they used to say, tummy. All right. So I'm seeing in the chat box James. Welcome, James. Roger, Ralph, Ted. Thank you very much. It gives me some peace of mind that the technology is working. So thanks for being here early. And now, since you are here early, now's a great time to get yourself ready because we have a lot of great information to cover today. We've got a ton to go through. So make sure you get like a pen, pencil, paper, something so that you could take notes. Now's a great time to turn off your cell phone. Worst case scenario, just kind of put it on do not disturb, or flip it over. Don't throw it out the window. Close your door. Just minimize distractions, right? Because you want to focus for this next hour. Okay, and let's see. Just get ready to learn. Those are my 3 gets. To get ready to learn, get rid of distractions. I mean, because the things that you're going to learn today, I've seen change a ton of people's lives, my life, and you're in the right spot today. So you're in for a great webinar. Thank you for being here early. We got about 3 minutes or a little less before we officially kick off. So in the chat box, so I'm going to be interacting with you a lot today. Hopefully you don't mind. We're going to be talking back and forth. This is a live webinar. It is October 4th, and it's just about 2 o'clock on the East Coast. So if you can, find your chat box now, and in that chat box, let me know where you are listening in from. I happen to be a little north of Charlotte, North Carolina, and I think this is our 3,000th day of sun. I think a couple days ago, it was actually the hottest day of the year. Can you believe that? In October, it was the hottest day of the year. They were canceling my daughter's cross-country practice because it was too hot out for them. So Elton, welcome. Bruce, welcome. Gerald says he's from San Jose. I bet you it's nice over there in San Jose, Gerald. Ralph from Michigan. James from Chicago. I happen to be a Bears fan, James. I'm not sure if you are, but he says it's 55. Whew. Over here, it's probably nearing 90. Let me just double check. Yeah, it says it's 92 degrees outside. Whew. All right. Roger from Bullhead City, Arizona. He says it's not the end of the world, but we could see it from here. Monica from British Columbia. Welcome. Elton from Chino Hills. And Val, I see, from San Mateo. Welcome to all of you. If I missed your name, I apologize. So we are about to kick off. We are less than a minute from kicking off. So again, welcome. Again, my name is Brian D'Amico. I don't think I said that earlier. So welcome to today's session. We're officially going to kick off in just a second. So again, if you don't have a piece of paper, pen, something to take notes, grab it now because we are about to get started. So hopefully you are as ready as I am for today's session. All right, I'm looking at my clock. It is 2 o'clock on the East Coast, so let's officially kick things off. Welcome to today's session. It is titled The 10-Minute Investor, the subhead, consistently outperform the market in less than 10 minutes a day. Now, of course, that doesn't mean we're going to be a day trader. All right, we are not going to be in and out of the market in 10 minutes. This is not a day trading webinar. If you thought it was that, you're in the wrong spot. This is where you could just sit back and relax, like the person on the hammock, and relax and maybe spend a few minutes a night managing your account and still be successful. All right, my name is Brian D'Amico. I'm one of the coaches / instructors here at VectorVest. I've been here for the past 18 years working with people, helping them improve their investing results. I am really excited about today's webinar. I don't usually get to teach these Friday webinars, so it is great to be able to do this with you because these are one of the things that I work with people every week. In fact, I coach people every Thursday on these topics. So it's great to be able to introduce them to you today. All right, because I'm going to show you a step-by-step plan to outperform the market in as little as 10 minutes a night. All right, so my promise to you in today's webinar, let me just get my mouse working here. Let me make sure everything is showing. There we go. My promise to you in today's webinar is that if you follow the steps that we're going to be discussing today, you'll know how to invest with confidence. That's a huge thing, having confidence and consistently outperform the market in less than 10 minutes a day. All right, and like I said, you're not going to be like a day trader. This is a relaxed type of investing. Now, if you did want to put a name to a face, I'm the one in the red shirt there, and then on the right-hand side, I'm the one in the bottom corner. My name is Brian D'Amico. I am, like I said, I've been here at VectorVest for about 18 years. Prior to that, I was a third grade school teacher. Some of that teaching style does flow through to these webinars. I love to interact. I love to have fun. Hopefully, you're okay with that. And I'm going to give you everything I can for this next hour. Like I said, we're going to interact quite a bit. I'm going to transfer as much of the knowledge I've got to you in this hour that we've got, and we'll lay out a plan for you. And then towards the end, if you want more help, I'll point you in the right direction. So if you're cool with that, just give me a yes in the chat box, and we will plow ahead. And I'll let you know how you can know if you're in the right spot. So like I said, we interact quite a bit. Elton, you're the first one in. Elton, Anita, I see yeses down the box there, and I just see Phil flying in there. So this is how you know if you are in the right webinar, because sometimes you don't know. You sign up for a webinar, you're like, I don't know if that's right for me. So you're in the right place if maybe you're tired of buying stocks only to see them drop right after you buy them. Sometimes it feels like someone's like watching over your shoulder, waiting for you to hit that buy button. You ever get that feeling? Or maybe you're frustrated because you don't know when to sell one of your stocks. You might have had a profitable trade, but then you watch that profitable trade turn around and then becomes a loser and you sell it at a loss. Or maybe you feel you don't have the time to manage your stocks, like you're crunched for time, and maybe you have a job, right? Maybe you're not retired yet and you have a job, and committing the time to manage your portfolio is difficult. You feel you don't have the time to do it. Or maybe you just don't have any confidence in yourself that you can actually make money in the market due to all the things that have happened to you in the past. Maybe you just lost confidence in yourself. All in all, you just want a simple way to buy the right stocks at the right time. If any of those things kind of ring a bell to you, you're in the right spot. Because what we're going to do today, what you're going to learn today, is actually several important things. All right, so first off, the biggest thing that we're going to cover in section number 1, think of that as a shift from where you're getting inconsistent gains to where you're just getting consistent gains. Okay, we're from inconsistency to consistency. And the things that we're going to do in that section, or we're going to cover the biggest mistakes that you might be making, that a lot of people make. We're going to identify those mistakes. We're going to talk about what they look like. We're going to talk about what to do and what not to do, all right? So just by knowing, these mistakes at first, it's going to help you out. So like I said, I'm going to tell you what to do as well. So we're going to fill in 5 steps that you need to be doing to get consistent gains. After that, in section number 2 today, we're going to move into how the top investors pick their stocks. So in this section, that's where I'm going to give you a 3-part stock buying checklist. It's actually the same checklist that I go through when I'm looking for stocks to buy. We'll do the exact same thing. And actually in that section, I'm going to show you, what to look for. We'll look at examples, and then kind of a little special treat, since we are on a live webinar. What you and I are going to do is we're actually going to do it together. We're going to go into the same software that I use, and we're going to look for some stocks, right, using that checklist. Now, of course, the decision to buy a stock will always be up to you, but I'm going to show you the same types of things that I would do. Hopefully that sounds cool to you, so we'll hop in there and do that. All right. And let's see. Yeah, so hopefully at the end of today's session, you'll have at least a couple of stocks that seem interesting to you that you'd consider buying. When the time is right. We'll talk about timing in this webinar as well. In fact, in section number 3, when we wrap things up and put it together into a plan, I'm going to give you that like a 10-minute routine that you could do, basically starting tomorrow. Right? That's why this webinar is called the 10-Minute Investor. It's a 10-minute routine that you can do each night to manage your portfolio. It's the same routine that we teach our clients to do, so I'm going to pass that on to you. Okay? So, in fact, it actually originated with one of our clients that we're going to talk about later on today. And I saw somebody in the chat box asking for a PDF. Well, what I'll do is if you stick to the end, I'll give you a PDF. It'll be a template that you could use to create your own plan. All right, so we're going to lay out the pieces of the plan today, and then this little PDF that you can print out will help, and you could start filling in your notes onto that PDF. All right, now, one thing I will ask you to do is remind me when we get to the Q&A at the end, because a lot of times I forget, to be honest. We go through a lot of information today, so please, when we get to where I say, hey, let's open it up for Q&A, just say, hey, Brian, don't forget about that PDF. So how about this? I want to make sure I'm focusing on what you need. So in the chat box, I'm going to give you about 10 seconds to type this in. Anytime I ask you a question, I will, pretty much give about 10 seconds for you to type something in. In the chat box, what's been the hardest part for you about making money in the market? So share that with me. Just type it in the chat box. What's been the hardest part for you about making money in the market? James, you were the first one in this time. You beat out Anita. Anita, you're second again. So James says, knowing what stock to buy or sell. Anita says, the lack of knowledge. Roger says, timing the trades correctly. Let's see, Gerald, what to buy, when to buy, and sell. Yeah, so I'm seeing a lot of, basically which stocks to buy, but not just which stocks to buy. I'm also seeing a lot of when to sell them. I'm seeing, and timing, like Roger was saying, timing goes along with that. And Anita, lack of knowledge, that's kind of all-encompassing. We're going to fill in those blanks today as well. So a lot of those things that I'm seeing in the chat box are, it's a good thing that you're here because it goes along the same lines of the when to buy, the what to buy, and the when to sell. All right, so there's a lot of investors out there who struggle with those things. Let me just give you a couple of quick stats. I won't stat you to death here, but most investors do fail. Most people fail at investing, and I don't want that to happen to you. Just some stats really quick. You can see here this, some studies that were done over 3, 5, 10, 20, 30 years. You can see in blue the average stock investor is well underperforming just the S&P and just barely beating out inflation. All right. And when you're inconsistent like that, you start to curse the market, thinking the market gods are against you. And this is probably the worst one. You label yourself a failure. You think you are a failure. But I'm telling you, when you do this right, after today's webinar, you're going to see how you no longer have to stress about these trades because you got things under control. All right, even if the trades go against you, you feel pretty confident you can handle it so that you can trade with confidence. So let's kick things off. I want you to sit up straight in your chair, like kind of get the blood flowing if you are sitting, kind of get the blood moving. Let's look at how to move from being inconsistent to getting consistent gains. Like I said earlier, the first thing that we need to do, the first thing is to fix the mistakes that you're making that are causing you to be inconsistent. Okay, so first off, the way I see it is there's actually 4 big ones, 4 big mistakes that cause you to be inconsistent. All right, these mistakes are preventing you from getting those consistent gains. All right, it's important that you understand this or you're never going to be able to fix things. So mistake number 1. This first mistake is that you think of the money first. You might think, man, you're rubbing your hands together. You're like, I want to make some money. And you're thinking, you're on this webinar and you're like, Brian, the whole point of investing is to make money. What are you talking about? That I think of the money first? Well, yeah, a lot of you think the main goal is to make money, right? But I want you to think about this, right? You had jobs, right? some of you here are retired right now, but some of you are still working. When you did have a job, when you went to work, you were not thinking about every second that you're there, the money. You're not thinking about the paycheck. If you were not successful at your job. When you went to work, if you were successful at that job, you were successful because you concentrated on doing the job well. When you do your job well, you get rewarded financially for doing a good job. So now think about it as an investor. You want to be thinking about making the best trades. That's your job. Making the best trades, doing the trades well. The money will be secondary. It'll come because you thought about doing the job well. If you think about this, when you're thinking of money, what does it cause? It causes you to be emotional and make emotional trades. Especially, recently, the past, 6 months, the market has been especially up and down and up and down. And when the market is up and down like this, it causes a lot of people to make emotional trades. And when you're emotional, you make bad decisions. Flat out, you make bad decisions. Just like the people with road rage. It's just an average person, but when they have road rage, they make decisions they won't normally make. All right, so let me give you a quick little quiz here. This is a little quiz. I'm going to give you 5 statements, and I want you just to take a look at these 5 statements and see if you've made any one of these statements recently in your trading. You can think ever, but have you made any of them recently? And if you notice one that you've ever said, please in the chat box, interact with me. Say, yes, I said number 1, or I said number 2, or I said number 3. Okay? Promise? All right, so number 1 is, man, I know my stock is down now, but it'll come back. How about, it's already down 20%, 30%, 40%. I might as well hold on to it now. How about this one? I have a profit, but if I close it now, it'll probably just keep going up tomorrow. Or number 4, I know I lost more than I thought, but if I close it now, it'll go up tomorrow. And then lastly, the last time I sold the stock, it kept going up. So I'm not selling this one yet. Right? Roger's like, yep, to all 5. Gerald, thank you. Gerald says 1, 2, 3, 4, and 5. Monica, I'm pretty sure I've said them all. Ha ha. Guy says they all sound familiar. Ted says 1, 2, 4, and 5. Jose says all 5. All right, now I want you to, let's put the pieces together some more. These statements are all emotional. They most likely led to poor results if you think back to it, because they show that you had frustration, fear, greed, despair, hope. And if you're thinking any of those things during a trade, before a trade, or after a trade, you're not going to be successful. So what we need to do is we're going to be building a system, right? We need to build in a system, right, which eliminates that. All right, so mistake number 1 was more psychological. Now these other ones are more mechanical, like the things that you're doing when actually placing trades. So mistake number 2 is you buy stocks that are already going down. Unfortunately, people do this because it's probably been ingrained in your head since you started investing. Because a lot of people, when they start investing, they listen to the TV, they get some sort of guru or some sort of specialist or financial advisor. And a lot of them, and I'm not saying financial advisors are bad, I'm sure that they have your best interest in mind, but they're just teaching you what they've always been taught, which is buy stocks that are going down. Right? I mean, you might have gotten into investing, you didn't know everything, so you went and checked the TV or a guru. And the gurus will say, hey, buy these stocks that are going down because they're cheaper now than they were before. Now you can buy more shares of them, right? Or if you own the stock, they'll say, all right, while it's falling, let's buy more of it. Let's dollar cost average. But let me show you what ends up happening. A lot of people, and this is actually a real example. I use this example. I mean, we come across these quite often, but this actually puts all the pieces together. So I love to use this in this webinar to illustrate this point. This is a real life example from one of our clients when he first came to us. He came to one of our coaching sessions and he said, well, before I even get to what he said, can you just look at the graph? If you look at this graph, a lot of advisors will tell you, a lot of places, I want to pin it on advisors. How about this? You might get told somewhere to buy this stock because it is quote unquote low. And if I get my laser pointer out, they'll say, buy it down here because it's low. They'll say, how much lower can it go? We're going to get in here and we're going to ride this puppy back up to former glory. Let's get in. Well, the same people who are saying to get in here were probably also telling you to get in over here or over here or over here. And I just saw a comment in the chat box, like Hassan's like, I haven't heard anyone say buy a stock that's going down. Yeah, they don't phrase it like that. They don't say let's buy the stock that because it's going down. But when you look at the chart, Hassan, when you look at the chart, the stock has been going down and they're saying let's buy it, and they'll phrase it like, this is a great opportunity. Let's get in now because the price is low. Let's get in now and let's ride this thing up. We can buy more of it now than we could before. They won't phrase it like, let's buy this stock because it's going down. All right, so I'm sorry if I phrased that the wrong way, Hassan. So if we're looking at this chart and this stock is down here, like I said, one of our clients came to us and they came to one of our weekly coaching sessions. Basically we get together with our clients and coach them on these techniques every Thursday. All right. So he came to us and he typed this into the chat box. Right? And his name was Steve. And you could see, I just copied and pasted this from GoToWebinar. He said, what do you think about Windstream? I just bought it a couple days ago. So if you look back over here, this was the day of the webinar. 2 days earlier was that last green light. Man, has that ever happened to you where you buy a stock and it's like the last up day and then it does nothing but drop after you buy it? Well, that's what was going on with Steve, right? He's like, man, this thing has been dropping everything since I bought it. What do you think about it? Well, we're going to talk more about the end result of this trade. But let me just say this. This was just a classic example of being taught to buy stocks that look like this, that are moving down. Now, the good thing is we talked to Steve for a little bit, and then he typed this into the chat box. He said, all right, I'm selling it now. And like I said, we're going to talk more about why he sold it a little bit later. We'll come back to that. But I just want to get across the main point here, is that when you buy stocks that are in an overall pattern of moving lower, and you see that by lower highs, lower lows, when you do that, they typically continue to fall over time. For example, this one, it was a good thing Steve sold because Windstream, after he sold it, dropped like 10% over the next couple of weeks. It didn't do anything abnormal. It just was continuing the pattern that it was already on. And over the next few months, it dropped about 60 more percent. In fact, I just looked at it recently. I know this was an older example, but I pulled up Windstream not too long ago, and this Windstream eventually filed for bankruptcy, right? It was trading at 20 cents. Imagine if Steve didn't sell it on each of the little upswings that were happening here. You just get so hopeful, only to have your hopes crushed each time it never made its way back up. Let me know in the chat, has that ever happened to you? You just get so hopeful thinking now's the time it's coming back. Now's the time. And you end up like, oh, well, I might as well hold on to it now. Patty's like, yep, yes, that's happened to me. Right? So what we're trying to get across here is if you know the right buying criteria, it could all be prevented. So I want you to keep this in mind. What you see in the past is most likely what will happen in the future. So being taught to buy stocks that look like this, this part back here, if that's what you've been buying, that's a big reason why trades aren't working out. And it's also one of the big reasons that you make mistake number 3, which is you end up holding on to losers too long. You end up holding on to losers too long, right? You might have been in the same shoes as Steve, like Patty typed in. And Roger, I'll get to your question in a little bit. Right? You might have been in the same shoes as Steve, where you bought a stock and right after you bought it, it started to drop. You end up holding on to that losing trade thinking it'll come back. I couldn't have been wrong. Or worse yet, you think, well, I'm going to buy more of it now. You can't admit that you made a mistake. One of the worst things that you can do is buy a stock and not have an exit plan. It's like jumping out of a plane without a parachute. And if you look back at Windstream, a lot of investors would have just sat on that trade, hoping it was going to come back, and then find that they're still holding on to it years later. Right? You know, Patty and others. I'm trying to figure out how best to say this. But isn't it emotionally draining when you look at your portfolio, and everybody else can chime in. If you look at your portfolio and you see a big loser, every day you look at it and you're like, man, I'm a failure. I did something bad. I'm never going to be good at this, because it's a constant reminder in your portfolio every time you look at this thing. Right? Yeah. I mean, if you look at your portfolio, what's the biggest loss you got in there? All right. So it's very emotionally draining to have those things in your portfolio. It's a constant reminder you did something bad. All right. We don't want that to happen to you. So you're not going to buy stocks that are going down. Right? You're not going to do that anymore. And when you get into a trade, you're going to have an exit plan. All right. The fourth mistake causing people to lose money in the market is they just ignore the market's direction. They just totally ignore it. And this could be huge, even huger than any of the other ones, because a lot of people are taught buy and hold is the way to go. Just put your money in the market and let it ride. And I know this because I was talking to a financial advisor one time, and he said, you know, Brian, what you should do is just, put your money into this XYZ thing, and he actually said these words, don't look at your account for a whole year. Like, set it and forget it almost. When you buy and hold, the reason I got a picture of a roller coaster there is because that's what your portfolio goes through. Slow moves up, fast moves down. Slow moves up, fast moves down. Right? It's great if you get in at the bottom, but not everybody gets in at the very bottom. Okay? This is just an illustration of a period of the market, about 15-year period, where, some of you are probably old enough to have experienced the dot-com bubble, right? And maybe this one's more recent, the global financial crisis. I got another slide showing just a year ago what happened. Right? The point here is, during, let's just say the global financial crisis in 2008, the market dropped very quickly. It took 6 years for the market to go up. 6 years for it to go up. And in 1 year, it gave it all back. And then people who lived through that, it took them another several, now this is if you stayed in the market, it took them another several years to get back up to where they were before. All right, so you've got to pay attention in the market, because if you don't, in 2008 alone, the market dropped 40%. And if we look at just last year, do you remember last year? Just in 2018, at the end of 2018, the S&P dropped 20%. So you got to be paying attention in the market. You got to not be buying when the market's going down. You got to pay attention. So remember the mistake is you ignore the market. So you've got to pay attention. And later on in this webinar, we're going to be talking about how you can pay attention so that way you don't end up like Robert here. Robert wrote to us, and the main gist of what he wrote to us, let me just get my pen, is he was using professional advisors, and basically in 2008, during the financial crisis, he was told, let's ride this out. So basically, he was continuing to buy stocks, sell stocks, buy stocks, just manage his portfolio as usual during that period. He ended up losing 40% of his retirement. All right? But this webinar is about you. Let's take a look back at those 4 mistakes. It's important for you to look at those mistakes and identify the ones that you've been making. So there they are on the screen. Which of those mistakes do you feel has cost you the most? And if you don't mind, Just share. You can share. Nobody can see your name. How much do you think it's cost you? If you were to put a rough estimate on it. I've had some interesting numbers typed into the chat box in the past. So, Monica, you were asking about what was mistake number 2 again? It's that buying stocks that are in downtrends. Patty was saying to something I was saying earlier, constantly thinking the next day is going to be the low where things will turn around. And Patty said it cost me thousands. Guy says number 3. Ted says about 7,000. Which mistake, Ted, was caught? Are you making all of them, or is there one specific one? Gerald says number 3. Michael says I've done 2 and 3 because of number 4. Roger says that was interesting, Michael. That's an interesting way to phrase it. Roger, James, and Ted all say number 3. Roger's like it cost me several thousand easily. All right. Well, I'm sure you're interested in not just identifying the mistakes, right? Let's fix it. So let's fix it. So we're going to install the correct system here of, how to fix these things. So I'm going to share with you the system that we use with our clients. What we're going to do is I'm going to lay it out for you so you can see what it looks like. Right? This is like I said, it's the same system we teach our coaching clients with every week. So I like to draw it out as a triangle, all right, to show that it leads down to a couple of things. So if you have a piece of paper, remember earlier I said get a piece of paper out? So on the piece of paper, just draw out a triangle that you can have it look like that. So you have this triangle. We're going to have 5 sections. So do the best you can to get 5 sections. All right, so in those 5 sections, the reason, again, I draw it out as a triangle because I like to illustrate the point that by doing these 5 things, it's leading down to some end results. So the first thing that you want to do is you want to analyze any stock that you own. So that's the first step. Take a look at the stocks that you own. But the things that you're going to learn there will also help you when you're trying to identify stocks that you're interested in, things that you want to buy. Okay? So we call that, just stock analysis, right? Analyzing your stocks, knowing how to analyze a stock. But one of the key things is not spending a ton of time doing it, which is when we get into the section number 2 today, we're going to be talking more about that. So the first thing we need to do is do some stock analysis, right? You got to take an inventory of all the stocks that you own, and you want to identify a couple of things about them. So you can write these things next to it. You're going to want to know whether the earnings are rising or falling. Okay, the company's earnings. All right, so if I get my pen back out, let's see if this works. I'll just put an E for earnings. You want to know the company's earnings, whether they're rising or falling. You want to know whether the price, I'll just put a P, the price to value relationship. You want to know whether the price is over its value or under. All right, so these are the kind of the core things you should start off with. The price to value relationship. And then I'll put a T for the trend, because remember earlier we wanted it to be in an uptrend. So we'll start with those 3 things. And then you can look at some other stuff if you want, but those are the kind of the core things when you're analyzing the positions that you currently own, especially. After you do stock analysis, the second step is you don't want to be holding on to losers too long. So what you need to do is you need to make sure that every stock that you own has a stop in place, which minimizes your risk. All right, so in other words, you want to know your exits. Okay, you need to know your exits. All right, so one of the things that we teach our clients, and of course, in a 1-hour session here, we don't have time to get into all the nitty-gritty details, but the first thing we just say is take a look at the stocks that you own, and you got to set a stop. And so one of the things you should do right now is take a look at the stocks that are in your portfolio, know your exits, and at least identify your line in the sand of when enough is enough. Number 3 is a buying signal, because you don't want to ignore the market anymore. You want a definite signal, a rule, to make sure you know when the market is rising. That'll let you know that it's okay to be buying. And again, we'll start to fill in some of these things later on in the webinar, but let's do a little bit high level here. You want to have a buying signal that tells you it's okay to enter the market because the market is going up. And like I said, I'll tell you what I use in just a little bit. Fourth, once you have that buying signal, then you're like, all right, let me go out and find some good stocks. Because you don't want to be buying stocks that are going down anymore. You want to be able to find good quality stocks that are rising in price for your portfolio. So you want a technique that finds those stocks that are likely to go up and not down, and do it quickly. So you're going to use some of the same techniques that you did in section 1 on stock analysis, but you need to have a way to find the good stocks. And then lastly, it should be in a plan, right? That'll make it so that you're not trading emotionally. So part of a plan is that it's actually written down. So some of you say, oh, I have a plan. Well, write it down. Make sure it's written down. Okay? And not just a plan, but it should actually be a plan that, like I said, is written down that you know works. So by using this 5-step process that you see here, it actually, like I said, leads to a couple things. Right? It leads to a couple things. It leads to 2 C's. When you do this, it's going to lead to confidence and consistency. Right? Consistent gains. Confidence and consistency. So the first thing that you're going to want to do is focus on the area where you're lacking right now. So just kind of take out your pen or pencil or whatever, and for now, just put a little star next to the thing that you're good at. All right? So if you are good at stock analysis, let's say, give yourself a star. If there's something that you're not so good at, maybe give yourself a frown. Like if exits are your poor area, then maybe a frown there. Just 5 seconds. Don't overthink it. Star, frown, just kind of go through that really quick. Are you ready? Once you've done that, what did you just learn about your investing strategy? So in the chat box, let me know. What did you learn about your system that you got? Maybe how many stars do you got? Patty says timing entries need work. Yeah, Patty, dividends are good. We think dividends are a bonus, basically, for what we're doing here. Don't get focused too much on the dividend, though. Ted says number 2 and 5 need work. Roger says, I clearly don't have one. I just have 1 star. All right, well, let's start to fill in those blanks today, Roger. Okay? So now that you know those 5 steps of the fix, let's start to fill in some of the blanks in that triangle. Like this is how to pick stocks. So what you're going to learn in this section will help with section 1, the stock analysis section, and the finding of the stocks section. Okay, so how the top investors pick stocks. All right, so what's holding everybody back from being a top investor? Well, a lot of the problems are not your fault, actually, because the market has a way of just burying you with data, right? A lot of places tout how much data they've got, and they just dump it on you. In fact, I got this I took a picture with my phone. I got this in the mail one day. I actually got this in my mailbox, and I was like, wow, look at all that information I got to sift through, right? And you get these things. It's no wonder that investors get confused when it comes to trying to pick a stock. And this was just for one stock, right? The other reason investors struggle is because you're not given the right tools. You're just not given an easy way to find the best stocks. You're left struggling. It's like giving a mechanic the wrong wrench. I mean, he might be a good mechanic, but you give him the wrong tools, it's going to take him forever to do the job, and he's going to do a poor job. And then you're taught by the gurus out there that you need to spend a lot of time on each stock. In fact, there was one time where Kramer was quoted as saying that you need to commit an hour per week per stock. And he said, if you don't do that, you might as well go out and gamble. I mean, if you think about that, what if you had 10 stocks in your portfolio? I mean, you do the math, right? You got 10 hours or more that you're trying to figure out these stocks. It all leads to analysis paralysis, where you're spending hours upon hours poring over the data, right? And then, I don't know about you, but I know this has happened to me sometimes, where you stare at data long enough, you start to convince yourself that you see something that's not really there. You know those little posters that you stare at? Well, that's what happens with these stock charts. You're like, oh, I see a cup and handle pattern. I bet I'm going to get in, right? So what we want to do right now is get what you want quickly, to be able to look at a graph and quickly know whether that you should buy it or not. Okay? So in just a moment, if you don't believe me that you can do this in a few seconds, in a few minutes, we're going to do this together. Remember, I said you're going to have a list of stocks. We're going to do this together. So let me show you how to do it. It all starts with this quote from the founder of VectorVest. That's the company I work for. Dr. Bart DeLito founded VectorVest decades ago. And he says, good portfolio management starts with buying the right stocks. And he said he uses an analogy of a sports team. He said, if you go out there and you fill a sports team with great players, just having those great players on the team will help the team do well. Whether you're a good manager or not, just those good players, the team will do well, whether you manage it well or not. So by filling your portfolio with those really good stocks, it's going to help out quite a bit. It's going to help you do well. So let me share this checklist with you that we use with our clients when we're just looking for stocks to buy. Just a quick way to do it. So first, we're going to look for stocks whose price is steadily rising and not volatile. And don't worry, I know I'm giving you words here, but we're actually going to go into charts, and you're going to see what this looks like. So first, stock price is steadily rising and not volatile. Company is making money and growing their earnings. And you want to favor the ones that are undervalued, okay? So I like to start off with this quiz where I'm going to give you a choice between, or among, I should say, graph 1, 2, or 3. So here we're looking, I know it's kind of small, but they're showing graphs of about a 1-year time frame. We typically start by looking at a 1-year graph, and then we'll expand it out to like 3 and 5. So I'm going to give you a 1-year chart. And I just want you to look at each one of those, right? And in the chat box, if you were to buy one of those, before you came to today's webinar, which one do you think you probably would have bought? In the chat box, just say, I would have bought one. You can just give me a 1, 2, or 3. That'll be easy. Now, you got to be honest with me, because everybody right now is typing in 3, except for Patty. Patty says number 1 because it had a lot of room for growth. But everybody else is so far number 3. Monica says, I would definitely have looked at number 1. Okay, so number 3 is the one that we would favor. And let's talk about why. Because it's not volatile. All right, let me get my little laser pointer back out. It's not volatile. Right? It's already doing what you want. It's already going up. So it doesn't have to break pattern. It's already doing what you want. It's rising in a smooth and steady fashion. The pullbacks are not very severe. Okay? This helps you sleep better at night when you know that you have a stock in your portfolio that isn't going to drop off the face of the earth overnight. Okay, remember, what you see in the past is most likely what will happen in the future. And so let's take a look at the other ones. So if I'm going to get my pen back out, and let me change colors here. How about white? With stock number 2, you can see a lot of volatility, right? Up, down, up, down, up, down, up, down, up, down. Okay, it's for some people, but not if we want to start to be more consistent and remove emotional trading. Okay, it's very volatile. And if it was volatile in the past, guess what? It'll most likely continue to be volatile moving forward. So a lot of people think, oh, well, I'm going to buy it here and volatility will be over. It'll be nothing but it'll go up after that. Well, no, it'll probably continue to be volatile. Over here with stock number 1, we kind of already talked about the downsides of this one. It's going down. It's most likely going to continue that trend going forward. Right? You don't want to try and catch the bottom because a lot of people try to catch the bottom here, but they try to catch it here as well. They try to catch it here, they try to catch it here, and it just continued to move lower. Okay? So that's part 1. In addition, And I just saw this come in. Patty says, would you at least wait for a pullback? Well, remember, Patty, I know I'm going into a little bit more detail. I'm got to keep an eye on the clock. That's just the same old philosophy, Patty. You get trapped into, I'm going to wait for a pullback. Number one is, what if it doesn't have the pullback anytime soon and it just keeps going up? You're missing out, right? And number two is, if you wait for a pullback, then you're buying a stock that's going down and you never know how far it will fall. So that's why we like to buy stocks that are going up. My quick answer. So that's stock price. In addition to rising prices, we also want to look for companies that are growing their earnings. So this is a chart. I did a 10-year chart. I tried to pick a stock more recent that if you flip through stocks, you probably won't know the ticker. I tried to hide the ticker symbol on purpose. So what I've done here on the chart is I've added earnings per share. You see that over here, EPS. Here at VectorVest, we actually calculate our own EPS. It's a forecasted earnings per share, but we look at a lot of other things. We look at historical earnings, current earnings. We buy forecasts and we put it into our own formula and get our own forecast. It's a lot better than just kind of going out to Yahoo and looking at Yahoo Finance or Googling it, and because they'll just dump earnings data on you, like tons of earnings data that you have to figure out what it means. So let me just say this. When a company's earnings are rising, that company can grow. It can pour more money into research and development. And we've found that companies that have rising earnings have stock prices that tend to go higher. Right? I mean, wouldn't you rather invest? If somebody came to you and said, hey, would you invest in my company? You'd only invest in that person's company if they told you that they were making money and they had a good product, right? So do the same thing with your stocks. Only invest in companies that have rising earnings, because we call it the engine. That's going to help push the stock price higher. And even if the stock price starts to come down a little bit, that earnings engine is going to help it recover. All right, so you want to look for rising earnings. The third thing is, now this is a good to have. The first two are mandatory: rising prices, rising earnings. In addition to that, you want to favor companies that are undervalued. So here at VectorVest, we actually calculate a value. And over time, what we've found is companies that have a price that is under its value it's always fighting, trying to get up to meet its value. Okay? So you want to favor that. So if you had a choice between two stocks and everything else was equal, but one was under its value, one was over its value, you choose the one that was under its value. Okay? So that's the 3-part checklist. And using this checklist alone, just doing those things will make you a better investor over time. So you remember Steve from earlier? He was the person who had Windstream. I said we would talk about why he sold it. Well, there's a few reasons. Well, one was technical. We said, hey, Steve, it's in a downtrend and it's actually hitting a trend line. That's one thing. That's price dropping, right? So we pulled it up on a chart and we said, all right, so the price is dropping. Earnings is falling. Price is way over its value. We're like, Steve, it didn't meet any of the checklist. And that's when he was typing into the chat box, I'm selling it now. Instead of doing it that way, here are some examples that we do with our client. We illustrate with our clients on a weekly basis. And we track in those Thursday coaching sessions I was telling you about. We track a paper portfolio and we kind of illustrate how people can implement this system. Here's one that we did earlier in 2018, it looks like. This was HFC. We got it in here. The main thing is not necessarily the ticker symbol, but the pattern. Smooth price. Even the downtrend was smooth. Smooth going back up. Rising earnings. This was a 28% gain in, a couple months, it looks like. Right? Here was ABMD. Going into the trade, rising price, rising earnings. So forget the ticker symbol. That's the pattern we're looking for, and it's going to help you achieve 24% gain in a couple of months. And you'll also come across things like this: smooth rising price, rising earnings. This one continued to take off, ended up being a 72% gain in the portfolio over the span of, let's see, 1, 2, 3, 3 months, 4 months, right? The point I'm trying to get at here is that there's tons of stocks out there that meet this criteria that I just showed you. All right. And when you combine the right entry and exit rules, you're going to be able to stack winners like this over time. So why don't we do this? Let's do it together. Okay. You might be thinking, all right, well, how do I find stocks like that? I want to show you how I do it. Now, I know some of you in this webinar, you might not have the same tool that I do. All right, if you do, you can let me know. I happen to use a tool called VectorVest. I'm going to show you how I do it. Okay. So let me find it. I got it here somewhere. All right, so here's the tool that I use. It's called VectorVest. I'm not going to go through an explanation of everything that you see here, but let me just jump to we call it the stock viewer, okay? And there's a few ways that we teach people to find stocks, but this stock viewer that you're looking at here is in the US, we're taking about 8,000 stocks and we're sorting them so the ones with the best combination of their value, their safety, and their timing are at the top. Just think of it as a really good basket of stocks from which you could choose things to go with, okay? So let's do this. All I'm going to do, and this is, in all honesty, this is how I start to pick stocks for my portfolio. I start right here. I'm just going to graph them. And let me pull the graph over to the screen here. Now, one thing you do need to understand is the day that we're on today's webinar, was it October 4th? The market has, the last 2 days it was trying to recover. It just had a few big down days. So we're going to try to keep that in mind when we see a stock kind of like SAIA, where it had this pullback here. Pretty much every stock in the system, in the database everywhere, had a pullback recently. So what I'm going to do, I'm just going to flip through these charts and give you 3 seconds per chart. And on a piece of paper, write down the ticker symbols of the ones that are more smooth and steady going up with rising earnings. And I'll kind of make earnings a little bit bigger so you can see it. Okay? If there's one that you're like, oh, maybe I kind of like that, then skip it, right? I want it to be more of a definite, okay? So with SAIA, I'm going to give you 3 seconds, then I'll give you my feedback when we're done. So 1, 2, 3. Just write them down on a piece of paper and we'll come back to it. Here's FRO. 1, 2, 3. 1, 2, 3. 1, 2, 3. Hopefully on some of these you're like, all right, let's skip past it. 1, 2, 3. We're getting closer. Oh, this one's all right. ENTG, right? Okay. 1, 2, 3. That's cash. Ooh, DHI, huh? I'm going to skip. TER. 1, 2, 3. Something like this looks really good, but I'd want to check the volume on something like this. But anyway, I'll come back to that. Actually, no, I won't. Skip. Not a ton of data. That's one of the things I don't like about this one. Everything else looks good except for that it doesn't have a lot of data to go on. ACGL. All right, so I'm going to stop there. I just went through about 10 stocks. How about this? In the chat box first, how many did you write down? Just give me a number. How many did you write down that looked interesting? Right, I see 5, 3, 3. Yeah, 2, 3. That's the thing with it. How much time did you just spend trying to pick a good stock? Did you spend hours upon hours doing analysis, or did you find a stock within a few seconds? It was a few seconds, right? So that's all I would do is just flip through these charts and find ones that I really like. And the important thing is you don't have to spend hours doing it, and you don't have to choose all of them. If you just found one in about a 60-second flip through, your time was well spent, right? So let me ask you this. Let me just go back over to the slides here. I just want to ask you a question. How is that different than how you've been doing it? Is it a lot different? Somewhat different? More time? Less time? Maybe we can say it like that. Patty's like, not complicated, LOL. Patty said, not that made it easy. Roger said, very easy. Elton said it was faster. Anita says a lot less time. Yeah, and that's kind of the thing we're getting at here is you want to get good information quickly. Okay, you want good information quickly. So those of you out there listening to this webinar, I want you to decide right now. If you had a choice, would you rather be sifting through a ton of data or get your answers quickly? So in a little bit, if you don't have VectorVest, I want to gladly give you a way to try it out. But that's the tool that I use and I use that same checklist that we went over. So let's put it together into a plan. Okay, let's put it together into our 10-minute management plan. You remember Robert from earlier? Right, he was the case study earlier. Let's use him as a case study. He was the gentleman who, lost 40% of his retirement. We're going to see how he went from stress and overwhelm to getting consistent success using a plan. So this slide was just reminding you that he was the gentleman who lost 40% of his retirement. So he was also afraid that he would have to go back out and get a job. But before he did that, in that same letter, he said, before taking that drastic step, I started doing my own research to try and recoup my losses, spending hours upon hours each day in front of the computer, reading articles, listening to so-called experts. Subconsciously, I was only hearing what I wanted to hear. He said, I was now beyond despair. It all looked too hard, and getting back onto the job treadmill seemed inevitable. So let me show you how he saved his retirement. Okay, it's a simple plan. Let's draw it out together. So again, have a piece of paper, and there's 3 main sections to this plan. All right, so 3 main sections, subsections. So just draw out a 3x3 grid here. So the first thing that he needed was he needed criteria to tell him when to be buying. Okay, so that's the first section, when to buy. The second section that we're going to look at is the what to buy. Right? He needed his stock buying checklist to tell him what he should be buying. And then third, he needed to make sure he knew when to be getting out of trades. That's the when to sell piece. So now let's fill in the 3 boxes for each of those rows. The top row on when to buy. So what he needed first was a market signal, right? A market entry signal to tell him it was okay to be buying stocks. So you just put your market entry there. Now, here, some people use things like moving averages on the S&P. It's not my favorite thing because it doesn't give you a daily signal and it could be slow. In our system, we have a thing called green lights, which tell me it's okay to be buying. For example, it's so easy. Let me just show you VectorVest one more time. Basically, if I just go to this page here, you see this first column here that says price? I just have to look for a green rectangle to show up. Now, we could get a green rectangle as early as Monday, right? Most likely, it might come later in the week, Thursday. So I'm going to be checking this each day, looking for a green light, right? So you need to have something, hopefully, that is that easy and that reliable that tells you, hey, the market is going up. After that, you also need the market to be rising on the day that you purchase. So you have a signal saying, hey, the market's in an uptrend. You want the market to be going up that day, and you can make sure all the indices are up that day that you're buying. And third, on the when to buy, you want that rising stock. Right? The stock, not only to be in an uptrend, but to be going higher on the day that you buy it. Okay? So now that's the when to buy. You need all 3 things in alignment. Then the what to buy is this. I'm just going to go through this one quick because it was the checklist that we just went over. Rising price, rising earnings, undervalued. Okay? That was the same checklist that we just went over, but you should make sure the stock that you're going to buy checks all the boxes. So now when we get to the when to sell, what Rob used and what we teach people is you got to have a market exit. Not necessarily. One of the things that we teach people is you don't necessarily have to close all of your positions on a market signal, but at least stop buying, become defensive. And you need to have a market signal that does that. And we didn't have time a ton of time today to get into these last two, which are stop losses and profit targets. If we had more time, we have some rules in place. But just think about this. You need, when you set up your trade right from the very beginning, let me get a color that you can actually see. White on white won't work very well. So stop losses and profit targets. When you decide to buy a stock, let's say you buy it here, you should have a stop loss that you know and a profit objective. Instead of target, let's call it objective. That should be like a 2-to-1 ratio. And if we had more time, we can get into that. So that's the 9-part plan. And if you do that, and you could only it could only take 10 minutes a night. Okay, so I'll talk more about that in just a second. By having this written down, it helps eliminate greed and emotions. So take out your if you have colored pens, that's fine, or you can check mark this just like we did before. Kind of go through this and say, all right, well, check off the things that you do well and that you have and that work. So if you have been finding these 3 things, check them off. If you have not ever been looking at market stuff, X those. You get what I'm going at? All right, so check or X. And Hassan, I saw your comment. I'll get to that in the Q&A. All right. All right, so again, how many out of 9, what'd you get? 8 out of 9, 9 out of 9? So let me just say this. If it's anything less than 9, there's only 9 boxes. How'd you get 10, Thomas? There's 9 boxes. Come on, Thomas. All right, so if you had anything less than 9, I mean, there's some, where you need to work. You got some work to do, right? All right, so this is the 10-minute plan, right? Each day, actually start here. All right, we have people start here on when to sell. Determine whether any stock that you own, you need to sell. And then we say, all right, once you decide, if anything needs to be sold, then sell it. That only takes a few minutes, maybe less. You say, all right, these stocks need to be sold. I'm going to sell it. Then you come up to number 2, when to buy. Say, do I have a signal that tells me it's okay to enter the market? If it does give you that signal to enter the market, then you say, all right, let me make sure my stock that I'm thinking about buying meets the checklist. And then each night you just rinse and repeat those 3 things. Okay? By doing that, that is what helped Robert write us back and say, he used VectorVest market timing system together with the fundamental and technical analysis of picking the stocks. He said he went into the market, and by the end of the year, using those tools, he recouped all of his losses. And now he's just spending minutes a day to manage his portfolio. And that's what's kind of the point of this webinar. You could spend just minutes a day and give you back time in your life to do the things that are really important to you. So I asked you earlier, I already asked this, so I won't ask it again. What area do you need to work on first? We kind of just were talking about that just a moment ago. Okay, so once you get that to where you have all 9 check boxes, then you have a plan that you can rinse and repeat each night in 10 minutes a night. Okay, so now I can't know exactly why you showed up today. I mean, I could ask, right? But I'm going to make some guesses, all right? Maybe you haven't been satisfied with the results that you've been getting. Okay, and you wanted to improve. Maybe you have been getting buried by data, right? And you didn't know where to go. Maybe your results have been kind of up and down, maybe like that roller coaster ride. It might be a combination of everything. You just don't have confidence in yourself that you can buy stocks and that they're going to go up after you buy them. Maybe you're doing okay right now and you just want to get better. But even if you are doing okay, think about how much money you could or should be making. So in today's webinar, I hope you saw that the shifts that you should be making, that you can shift from data overwhelm to where you can get answers quickly. That, by doing that, you can invest confidently and not have to rely on those quote unquote gurus out there who tell you to buy stocks that are in downtrends. And you can get consistent gains in less than 10 minutes a night. when you have the right plan. And right at the start, I said, hey, I got an hour today. I'm going to give you everything I can. And I mentioned this a couple times through the webinar that at the end, I was going to show you where to go, to plug in the system, to use the right tool. And you can take all the things that we covered and plug them right in for as low. I'm going to give you a way that you can do it in like $10. Okay? So that you can get results faster. So it brings us to the obvious question, right? How do you do that? How do I create that type of system? I mean, you could choose, you have a choice, right? You could choose to leave today's webinar, which I hope you don't do right now, but you could choose to leave today's webinar right now and say, I'm going to do this on my own. Maybe put some of the things that you learned together and learn by trial and error. But remember, mistakes can be costly. And you shared that with me earlier. You made mistakes that some of you said cost you thousands. Why don't we do this? Over the next 30 days, I want you to choose to do what I did and what Rob did and what a ton of other people have done and use a system that gets you right to the solution. Right? Why do all the work on your own when there's a system that's already done all the work for you? Right? It's used by tens of thousands of people across the world right now. So I'm going to give you that plan for us to work together over the next 30 days. Really, like if we're going to get together, we're going to meet every week. It's called the Successful Investing Quick Start Course. All right, Quick Start Course for a reason. Right? It's going to get so that you can learn it quickly and get the plan in less than 30 days so that you can start to consistently outperform the market in 10 minutes a night. But I want to say this. Albert Einstein said, everything should be made as simple as possible, but not simpler. It's important that you understand what we're talking about here. Hold on one second, I got a cough. I mean, this is not a get-rich-quick scheme, right? It's not something where you're going to expect results in the next 24 hours and you become a millionaire and walk away tomorrow and retire. I mean, this is serious. It requires some effort on your part. If you're not going to commit to it, then don't do it, right? It's not for you. You should log off, in all honesty. This is for serious people who take their investing seriously, who are willing to put time in to learn the system. So that way you can get more money, more security, and more freedom. So let's talk about the Successful Investing Quick Start course that we've laid out here. It's for those of you out there who are serious, who want a simple way to buy the right stocks at the right time and know when to sell them so that you can see those steady, consistent gains and remove that frustration and anxiety from managing your portfolio. So the easiest way, let me just map it out for you really quick. All right. Remember that 5-step fix that we looked at earlier? I want you to see how each module will teach you one step in the fix. So module number 1 is we're going to give you a stock analysis system. So you're going to become an expert at analyzing any stock. So you're going to be able to quickly determine whether a stock is a good or a bad investment. All right. So that's where you're going to begin to get rid of information overload. Okay. You're going to see exactly what indicators to look at and get your information quickly. Then we're going to move on to the when to sell piece. Okay, know your exits. Remember that? The reason this is important is because you need to minimize losses in your trading. So we're going to walk you through the exact steps that you need to take right now to get rid of the stocks that are hurting your portfolio. We didn't have a ton of time to talk about exits today, so this is going to fill in the blanks. So the outcome here is you're going to be able to have peace of mind because you're going to go into any trade knowing exactly when you'll sell it. You're also going to know when to sell the stocks that you currently own. All right, so we're going to become an expert at stock analysis in Module 1. We're going to pluck the weeds out of your portfolio in Module 2. Then, in Lesson 3, Module 3, you're going to learn the exact signals to look for to tell you it's okay to enter the market. It's important to do this because if you buy stocks at the wrong time, even good stocks drop when the market drops. So you've got to know when it is okay to buy and when you should not buy. Okay, the outcome here is you're going to be putting probability of success in your favor. So if you think about what we've done, we've gotten the bad apples out. We've identified when is a good time to buy new ones. So that means Module 4 is all about good stocks. Right? Now, Module 4 is about teaching you what stocks to buy. Without this, you have to rely on those gurus sending you their stock picks, or you have to waste time sifting through a blizzard of data. So you're going to get our top 2 cherry picking techniques to pick the best stocks for your portfolio. So you're never going to be left with a guessing game as to whether a stock is good or not. Okay? You don't have to put your trust into some guru. We're going to show you exactly what to look for. So we've gotten the bad out. We're starting to put the good in. Module 5, Lesson 5 is all about your plan. Right, we got to put it together in your 10-minute management plan. You don't want to be spending hours upon hours doing this. Some people love doing it, and they do spend extra time, but you don't have to. So we're going to show you how to simplify your day and have a plan. So by the end of this, you're going to be able to consistently turn out profits in your portfolio year after year. Okay? By the end of this course, you're going to have a simple step-by-step system to buy and sell stocks. You're going to be able to manage your portfolio in less than 10 minutes a day, and you're going to have a system to consistently outperform the market. So, in all honesty, if I were to work with you, which we used to do one-on-one, we would charge like $95 an hour or something, and it would be $475 to do this individually. So we don't do that anymore. That's why the value is $475. Instead, this is what we do. I'd like to roll up my sleeves and work with you for the next 30 days. We'll turn your portfolio around using VectorVest. Right? Even if you've had no success or limited experience in the market, we'll do this together. We built these 5 lessons directly into the software for you. Okay, I'll tell you more about the software in just a second, and also that we're going to get live together. You've spent about an hour with me today. Here's what I'd love for you to do. If you want to join me and have me take you by the hand and help you fix your portfolio and plug in this system that consistently works, then instead of $475, let's, as you can see there, let's do it for just $10, $9.95. I'm going to put that link into the chat box. Is that okay? www.vectorvest.com/SIQSC. All right, you can just click on that link into the chat box. It's $9.95 for 30 days of the course and the tool, and I'll show you here. You get a bonus. A lot of you on today's webinar, you probably don't have the tool, so we're going to let you use the tool. You can use our top-end tool, and we have a real-time tool for the full 30 days. You can use the top-end tool. It's a $129 value. You can get that for the 30 days of the course. Okay? So it's going to give you time to do the course, go along with it, use the tool, come to the coaching. All right? Now, if you want to continue with it, great. If you don't, just send us an email before the end of the 30 days. All right? Number 2, bonus, is, and this is probably my favorite part, my favorite bonus, is I don't want to just give you this content and wish you the best of luck. I want to be in there helping you apply that content. So what I'm going to do is I'm going to be in there with you every week, making sure you're okay. Actually, I have a co-coach. His name's Todd Schaefer. He and I run these sessions together. Every week, you're gonna be invited to join these live webinars every Thursday, where we're going to give you tips and techniques. The main thing is about implementing what you're learning in the Quick Start course. All right, so we'll discuss what's going on in the market, what the signals are saying. We'll talk about what our paper portfolios do, and we'll guide you through the entire process. Okay? Some people who have taken this, just the Quick Start course, wrote us back, and Ajibi said, since following the steps in that course, my portfolios are up 22%. He said, these are my retirement portfolios, 4 in total, and the improvement, as I'm sure you can understand, is very important. Amelia said, everything is super info. Gave me the insight about investing, buying stocks, knowing when and what to buy and when to exit. Fantastic lessons all in one place. Walter said, I've committed to a single trade so far using the techniques. I'm up 5%. The best part is that I'm not losing sleep. I love that comment. Melody said, in the last 3 weeks, after pruning my portfolio, which if you think that's in the second lesson, and adding only a few stocks, up about 9%. Before doing this, I had an overall portfolio loss. I've got more confidence in my investing decisions. It's simple and easy to follow if you take the time to learn the process. And Terry said, I feel more confident on what stocks to pick, when to pick them. It makes me want to learn more. And Ray said, huge time saver. Your system brings a definitive clarity to the underlying markets, which I haven't seen in any other product out there. So if you order right now, like there's a little fast action bonus, by the way. Fast action bonus. We put together a list of 30 stocks to save you some time, so that way you don't have to go through them. If you order this $9.95 Quick Start course package that we've got, we will get you that list of 30 stocks. And that way you can take those 30 stocks, put them in your own little list, and you have at least a starting point of some really good stocks that we've handpicked for you, and you could start with that. Okay, but it's only if you order quickly, right? So go to VectorVest.com/SIQSC, and you could check that out and get it. Okay? Earlier when we were talking, I asked you how much those mistakes that you've been making were costing you. Right? Remember that? And some of you were typing in, a lot of you typed in number 3, some number 4, right? But a lot of you are saying it cost you thousands of dollars because you were making those mistakes. If that number that you typed in is equivalent to more than $9.95, let's fix things once and for all, right? Let's make it so you don't have to experience that anymore. We're heading into the tail end of 2019 right now. Let's use this tail end of 2019 to turn things around and attack 2020. We can attack the tail end of 2019, and we're going to be ready for 2020 and make it the year that we turn things around. And by the way, it's also completely guaranteed. If after the 30 days you want your $10 back, just let us know. I mean, think about this. I mean, you probably spent more than $10 on lunch, right? Spend $10 to change your investing life. Okay? And if you choose to want your $10 back, we'll give it to you. Okay? We're confident you're going to love it. Okay? So give us these 30 days. That's our plan. 5 lessons, which you can access right from the VectorVest program. It's self-paced. You can go through it as many times as you want. Plus, I'm going to be there with my co-coach, Todd Schaefer, every week with you during a live coaching call on Thursdays. And make sure you're on the right track. Plus, anytime throughout the week, if you need help, we have a support team you can call anytime you need help. 6 days a week, we're here to help you out. All right, so what I'd like you to do right now, go to VectorVest.com/SIQSC. That stands for Successful Investing Quick Start Course. Enter your details there. I'm going to stick around, answer whatever questions I see in the chat box. Fire away, right? Fire away. Whether it's about the service or the offer or whatever, I'm here to help out. It's been awesome having you here. It's always an honor that you trusted me and trusted us with your investing decisions and dedicated this hour to be here with us. You can also give me some feedback in the chat box on whether you felt it was worth your while to be here today, with what you thought about the webinar. You can let me know in the chat box. It'd be good to know for me to make sure that I'm on the right track with the webinar and it's giving you what you need. Okay, so let me look over at the chat box and I'm going to answer the questions that I see in here. Where are we here? Sorry, I usually have somebody in the background helping me. I'm here solo today, so it takes me a while to read some of the questions. All right, so I'm going to start with Ray because it's a short question. I can read it fast. Ray says, what time are the sessions on Thursdays? We meet noon Eastern time on Thursday. And if you can't make it, as long as you register, we'll send you a link to the recording. And keep in mind, Ray, you could always submit questions to our team. We have a great support team. You can call them or email them. And if they need to, they could get the questions over to me and Todd if it's necessary. But we've got a great support team that you can call 6 days a week. Roger, yeah, you say you currently use VectorVest. If you're currently doing an options course, just continue through that. As a VectorVest member, and just so if anybody on the webinar is a VectorVest member right now, it is on this Quick Start course we built right into the program, right on the training tab. So the course is right there. So if you're a VectorVest member, there is no extra cost for you. You can go to the training tab anytime you want. It's right there. You can link right here to our weekly coaching. So if you're a VectorVest member, this is where you go. Sound good, Roger? Roger's like, cool, with an exclamation point. All right, Roger. So take your time. Finish that options course that you're in, Roger. I always tell people, focus on one thing at a time. Bruce says, what days and times for the coaching? Well, Bruce, remember that the course that you see here on the screen is you can access these modules anytime within the product. Remember, I was just showing that. You can access these modules anytime you want. They're recorded sessions. The live coaching that we do is on Thursdays at noon. All right, Bruce? Yes. Oh, so yes, Vincent, I see your question came in. Same answer I was just giving to Roger, that it is included since you are a monthly VectorVest member. Thank you for being here, by the way. Just click on the training tab, and it is right there for you. You're welcome, Vincent. My pleasure. Bruce says, how does this work if you already have VectorVest? Ah, cool. Bruce. Man, I got 3 questions almost all in a row from VectorVest members. Bruce, hopefully my answer helped you as well. Just go to the training tab. You don't have to pay anything extra. It's right there for you since you're already a VectorVest member. James, good question. James says, if you reverse everything, can you use this system to sell stock short? Says 2 questions. Okay, so you have 2 questions. The other one is a different topic. I'll get to that next. Yes and no, James. We want people to become good at buying stocks and become really good at that before they start diving into selling stocks short. But in all reality, yes. The answer is yes. In down markets, that's when you're going to want to, if you want to sell short, you would sell short the stocks that have falling prices with falling earnings. Yeah. But remember, James, that typically downtrends are short and quick and fast. So you got to be a little bit more nimble, and there's a little more risk to shorting. So yeah, quick answer is yes. We want you to focus on the buying side of things first and get that hammered down first. John, the live sessions are on Thursdays. Oh, James, I forgot about your second question. Sorry. Your second question was, after the trial period, are we charged $69 a month, billed monthly, so I can cancel anytime? Yeah, you can cancel anytime. Yeah. So if you're paying monthly and you choose the $69 version, what it would do is, if you did choose to, well, first off, you can cancel in the first 30 days and not get billed anything after the $9.95. If then you start a subscription with us, if you choose to cancel, you can cancel anytime you want, and it would be canceled as of the end of that billing cycle, as the end of that billing month if you're on a monthly. Monica says, if the stocks you are looking at has everything you mentioned with a nice long uptrend, but the day you are looking, it is down a little, even though overall market is up, you wouldn't buy it. That's correct, Monica. Yep. Remember those 9 boxes? That was the top right box. We want the stock's got to be up on the day you buy. Jay says, after the 30 days, what are the options? Jay, actually, if you go to that page that's in the chat box, VectorVest.com/SIQSC, I actually have it here. This is what it looks like. If you go to this page, you can see, you can select which one you want. I would actually recommend that during the trial, you pick this one. Because, it's still $10. It's $9.95 regardless of which one of these you pick. I would recommend you just pick the bottom one. That way, during the 30 days, you get the real-time data. And in fact, we lose money on that, by the way, because we have to pay the exchange fees for you. So the $9.95 isn't even really covering our costs, because we're paying an exchange fee for that. So anyway, I could tell you to pick the intraday or the end of day, but if you want, pick the real time, get the best of the best product we've got during your 30 days. And then during the 30 days, when you get close to the end of the 30 days, if you want to continue with it and you would rather it, continue at the end of day or the intraday, here are the prices over here. And remember that the ongoing coaching with me and Todd on those Thursdays would be included. Okay? Got to go back to my question box here. Elton says, I used VectorVest about 12 years ago. Wow, Elton, that's been a while. Can I still get... Yes, Elton, just go to VectorVest.com/SIQSC and just fill in your details and we'll get you set up. Guy says, the webinar was very informative. Thank you for the feedback. I appreciate that. Jay, all right, I just answered your question. It looks like you just typed it in twice. And Jose, you asked the same question as Jay, so hopefully I answered that, okay? Okay, Jay, you say you're a member. So yeah, you have the course. So if you're a VectorVest member right now, it doesn't cost you anything to do this. Just click on your training tab. Michael says, you're already a subscriber. Michael, what I would do is, if you say you're lacking the confidence, Michael, since you're a VectorVest member, can you do me a favor and just go I want you to do a couple of things. All right, Michael? Go to the training tab. Make sure, try to come to our Thursday sessions, okay? Just click on this link. Come to those sessions with me and Todd. Let us type into the chat box what you struggle with. The other thing I would recommend that you do, Michael, is go to the Welcome tab and schedule your free personal session with somebody. Talk to them about your struggles. Talk to them about what you need help with. We want you to be successful. I mean, it doesn't make sense for us to not make sure you're successful. So, and this goes for everybody. Here at VectorVest, the only way we've been in business for decades is because we help people make money in the market. I mean, think about it. A lot of places out there have come and gone. We've been around for decades. I think it's been 30 years since VectorVest has been around. The way we do that is we've got a solid system, solid education, and we care about your success. Roger says that he's taken an options course with us, and he says he made 4 option trades. 3 of them are winners. Well, congratulations. That's awesome. Ray, hopefully I answered your question, Ray, because you were asking about the standard pricing after the 30 days. Prasad wanted to know if the stock scanning tool is in VectorVest. Yes, we do have a scanning tool. In the Quick Start course, we're going to focus you on some of the simple techniques. And really, I start off with the simple techniques. That's my first go-to thing. All right, Prasad? But yeah, we have a scanning tool in VectorVest. Bruce, if you're already a member and you wanted that 30 stock list, just either shoot our team an email or give them a call, and they can get it over to you. And speaking of that, I think I forgot. You guys forgot to remind. See, I told you I forget. You forgot to remind me to give you that little PDF I promised you in the chat box. Hold on. I just dropped it into the handout section. Vince, yes, we'll send you a link to the recording in a little bit. Probably later on this afternoon. Yes, Monica, same thing. We're going to send it to you via email. All right, I think I got all the questions. Last chance before we log off here today. Last chance to ask a question. Brrr. All right. Well, we're excited to get going. Next week, you're going to be introduced with Todd Schaefer. He will have our Thursday coaching session because guess what, folks? Next week, I'm going to take one vacation. I'm going to take a vacation next week. But I told you, Todd and I run those Thursday sessions every week. He's going to be running it solo. But then for the weeks after that, I'll be there. All right. Hey, Jay, thanks for the feedback. Jay says, great session. Thank you very much. I appreciate that feedback. And if anybody else has any feedback, just throw it in there. It's always good to see some feedback from the session. What was good, what was not good. I'll just skip past those things that you say are not good. No, just kidding. All right. So I think that's it. I think that's all I got for you today. We are always excited to coach people and help them out. And we look forward to working with you. All right, everybody, you take care. And today is Friday, so I hope you have a great rest of your weekend. And, oh, wow, cool. Some more people are typing in. Roger says, excellent presentation. Enjoy the vacation. Thank you, Roger. I appreciate that. Monica says, your pace was good, not too slow, like some webinars. I repeated info too many times. Sorry about that, Monica. Or is that other people who repeat info too many times? If it's me, I'm sorry. I guess it's kind of my school teacher days where you had to repeat things over and over for. Oh, you say some do, I didn't. Okay. Well, remember, I was a 3rd grade teacher, so I might have that habit of trying to say things over and over, maybe different ways, See you in a few Thursdays, Elton. See you there. All right, everybody, have a great rest of your week. Well, weekend. And we will see you back at the next coaching session. All right, take care, everybody. Bye.